Much of the talk on global markets overnight has been about jobs and grain. Grain prices in the US have increased 8% to a 2-year high overnight after Russia banned exports of their grains. This comes as drought ravages their domestic supplies and they begin to eat into some of their large inventories. There will now likely be a scramble for grains globally. Egypt seems to have an urgent need now that some of their Russian contracts won't be filled for the rest of the year. Australia may come into the mix to supply some of these contracts, and this should be positive for prices back here in New Zealand. Global share markets were down overnight in the US as it is expected that job data will be pretty soft. It is expected that unemployment in the US has increased over the past quarter. The New Zealand dollar took a tumble on Thursday after some pretty disappointing New Zealand employment data. The unemployment rate has increased to 6.8%, much higher than market expectations. This comes after the unemployment rate fell from 7.1% to 6% in the first 3 months of 2010. It does seem like employment data was much weaker than many were anticipating. The Kiwi dollar fell about 0.5 cent against the US immediately following the announcement, and on Friday morning is trading at 72.85 against the US dollar. The drops in the Kiwi dollar comes as many now predict that the Reserve Bank will hold increasing the official cash rate from here on. We have trimmed our forecast and now expect only one 25 basis point increase in September for the rest of the year. Now this even looks uncertain. Despite some recent price drops, we remain positive about the outlook for dairy. Chinese demand should remain robust in the long term. We are forecasting some rebound in commodity prices later on this season, but we wouldn't be surprised to see some further short-term weakness. Since Fonterra made their initial payout announcement in late May, whole milk powder prices have fallen 24% on their global dairy trade auction platform. The currency is also now trading at about 73 cents against the US versus 68 cents at their initial payout announcement. Both of these factors have moved unfavourably for Fonterra. We have trimmed our payout forecast for the coming season and expect to see a revision lower in time. We are now predicting the 2011 payout to come in closer to last year levels of about $6, give or take 20 cents. This excludes any shareholder dividends.